You've probably realized that rules are stacked against you in trading, and prop firms are doing everything possible to keep you away from passing challenges. You're running from one formal trade to another, so how do you avoid this vicious circle, guys? And since we are entering the week of 4th of July, I expect lower trading volumes, therefore less day trading opportunities. I wanted to use this as a window of opportunity to review a lesser known trading strategy, which is primarily used by swing traders, but also it could be applied to day trading. So before further ado, let's dig in, guys. Before we jump into more in-depth analysis, guys, I wanted to share that this is a screenshot, but I will also walk you through a live trading environment. This is done for the sake of being able to more clearly portray what I want to say first, and then we can move to a live chart. But initially, once we have spotted the supply and demand zone, and this was a question asked by a student, so he was struggling in identifying which part of the trading zone he should be looking for in order to maximize his entries, to minimize the potential risk. So once you draw your demand zone, what I would do as a second step of the process is to divide the zone into two equal parts, and this will be the upper part and this will be the lower part of the zone. So my highest probability trades or high PT, they're coming from this part of the zone here, or the lower part. So in this way, you need to, in order to memorize that and not get confused, you're always looking at the extremity. So if you're looking to go and enter in a long trade, you're always looking for the price to make the most extreme move, and only then look for trading opportunities. In the case of trading the demand zone, this will be the lower part. In a case of trading a supply zone, this will be the upper part, or this part of the zone. And having found this zone first, then the second part is identifying the lower bit of the zone as shown in this example, and only then look for the confirmation. And the confirmation is coming from this candle here. So this would be a bullish engulfing pattern. We are looking at the green candle engulfing the body of the previous candle. For me, it's very important if the candle can engulf the body, and then if it can engulf, of course, the wicks, this is even better. But I'm not getting psychotic regarding the bullish engulfing the whole body and the wicks. So as long as the body is covered, this is a good enough sign for me, as this happens here. So this will be your buying signal. And again, before you jump to me, I would like to actually share a live trading chart. So this is the pound versus the dollar. And here what I will be looking for is, again, once you're drawing your supply zone, and this will be just before the price made this drop, then I'll be looking for also drawing the demand zone. So this will be right here. And based on that, when the price is actually approaching the supply zone, I'll be looking again for the same exact thing. So if we divide this into two equal parts, and we do the same with our demand zone right here, this is going to make things a lot easier for us. So I will be only looking for the places in this zone where the price is actually closing above midpoint of this zone. So this will be all of the trading opportunities that appear in this area here. This will be the high trading probabilities for me. So the first time we saw that was right here, and we had a bearish engulfing pattern, which was a very good sign, and this would have given us a great entry for a short trade. On the other hand, when the price went into the demand zone, I'll be looking for the places where the price actually closed below this center line, and this will be the lower part of this box. So the first, signal, and this very large green candle, which was a bullish engulfing pattern. Again, I'm looking for only the body, or mostly the bodies. This would have given us a great signal. The only thing is that here the price action was miles away from where your stop loss should have been, and this might have obstructed you from taking this trade, depending on how averse you are when you're taking your trades. But this is where the signal on this particular occasion was. And now if we switch to the US dollar Japanese yen, this is again the 4-hour chart, we can see that this was the most clear supply zone here. What happened here was the price just pierced above it, and this also is a very good sign for me if the price is breaking above or piercing through the supply zone. And the first place where we had a good potential entry was again right here, right at the top above the center line, and this gave us a two-body bearish engulfing pattern. As you can see, the first red candle, which was followed by a second red candle. This was the second body which engulfed fully the previous green candle, and this was the sign to actually go short on this pair. So all in all, if I need to recap what I've just said so far, let's say you have this demand zone and then you have this supply zone. The first thing would be finding and identifying those zones. The second thing would be to find the center line and just divide those zones into two equal parts. And in this particular case, our high probability setups or high probability trades would be at the extremities of those zones. So if that, let's say we are running and looking for a buy order, this will be our high probability place in the demand zone. And if we are looking to short, this will be our higher probability trading zone, or anything that is above the center line here. So this will be something that I would be very cautious about. And on the other hand, with the demand zone, I'll be looking mostly for when the price goes to the extremity of this zone and dips below it in order to look for a long trading opportunities. I would almost always ignore everything that happens just above this center line, or let's say here. I would just paint this in red, and I would also ignore with almost certainty all of the setups that appear in the lower part of the supply and demand zone. Emotions tend to be the biggest obstacles for traders. That's the reason why you need to think like a machine. And if you can't really do that, you need to have specific rules and principles by which you need to abide. You need to have almost like your best 7 rules, which are there for you at all times, when the markets are rising, when the markets are falling, and when the markets are stagnant. So make sure you have this list handy next to you. If you have any questions or you want to know a little bit more about the way I use this way of trading, you can drop me a question in the section below. I'll see you in the next video, guys.